We have Manisha with us. Manisha, would you rather be at Vienna?
Oh, yeah, I would really want to do that. Yes, please. But trying to make the best of it. And those numbers, the Fitch numbers actually do not sound good because, you know, this has been in continuation because right from IMF to World Bank, even OPEC has been saying that they have been cutting the demand growth from Asia and India as well as we get into FY19. And that doesn't really sound good because India clearly has been outperforming global demand growth when it comes to crude oil. But with those kinds of numbers coming in, now the agency is also putting it out, does tell you that there are demand concerns. So that much more pressure on the OPEC and the allies to ensure that there is an output cut for 2019. Remember, we have been seeing 1.8 million barrels per day of a cut in last couple of years. But with the kind of increase in supplies that has come in from US, from OPEC, Saudi Arabia, Russia, etc., up nearly 4% for OPEC alone in last 4 months, there is that dire need to go out and cut output for 2019. Of course, OPEC and Russia have been saying that it is not just going to be about 1 year or 2 years. They are looking at a stronger, longer-term framework in sense of agreement. So that is something that the markets would be latching on to. Apart from that, 1 to 1.3 million barrels is what we are working with is in price right now. Anything less than that will really be very bearish for the crude oil prices. Anything more than that, and we perhaps will see 70 in this week itself. So that's the kind of uncertainty, exaggerated opinions and moves that the markets are really getting into in sense of this OPEC meeting.
Okay, all right. It's likely to get slippery from here on. Thanks so much, Manisha, for joining and giving us those details. But on that note, let's hear what analysts they're expecting from today's OPEC meet in Vienna.
Whilst oil markets were very finely balanced, literally a few months ago, policy-led increase in production from three major producers, US, Russia and Saudi Arabia, has just taken the supply above the demand now. And now, basically, this is the excess that we have in the market, and we will keep going down if OPEC does nothing.
There is concern in the market out there that, you know, President Trump is going to lean very heavily on the Saudis to do nothing. But frankly, I think it's in the Saudis' own domestic interest to pull these barrels. I mean, they essentially oversupplied the market over the summer, and now I think they're going to have to pull those barrels back. A million is essentially where we're going to start from in terms of a cut. I think the question is, do we get up to potentially 1.5 or higher? But I mean, my base case is they pull this thing back by 1 million.
Well, I think there's so many different moving parts. More importantly, where does the Saudis play? Where does Russia play? And of course, the US shale production. You would have to think that at the current point in time, crude prices have been hit massively to the downside. There would be a fear amongst OPEC members that is there going to be a continued slide to 45 for WTI and possibly sub 55 for Brent in the short term leading up to Christmas, which could create, I think, major panic and further suggestions that you could see further softening.
In terms of actual production cuts, I don't see much political will coming from Saudi either. So if Saudi and the Russians both are not politically motivated to have a drastic cut, and certainly the U.S. and Iran trying to put out as much product as possible in the coming months, we probably see an environment where, unless we see drastic action, we're going to have prices fall.